Okay, now we're on video 3 of 3, service now. One second. Okay, so clearly not easy to chase it after such a big rally. Good strong P&L on a quarterly basis and year over year. So the battle is over this peak. This peak, in theory, if they take these peaks out, they end up in the zone 680, 670, but it takes a lot of courage to get long a stock that has failed miserably up here twice before. It does have momentum and it can do it. So you have to ask yourself, are you investing or trading? If you're trading, I get it. If you're investing and going all in now, I don't get it. If you're in it for the long term, what's the difference if you buy it here or 628? Not much, right? And so anyway, why go all in? Nibble, maybe. If I'm an investor in this company and I didn't have the courage to get long here, why am I getting long here? I don't understand it. The mentality, the chase mentality. But I'm not going to stop you from it. It's in the hands of the buyers. If it was my brother, I would call him every day and tell him not to do it. But anyway, let's see here. We're going into 470s. 470 is a big selling zone. So I thought we would have an opportunity to get long at 380. It came down to 390 something, 92. Maybe the next girl will do it. Lower lows and lower highs is what's going on. So it's in the hands of the bears since, I don't know, July. It has had a higher high, but you can tell if you exclude the outliers, you can see it's kind of drifted lower. But that's not a bearish thing. They're just trying to find footing for a burst. Now, if it takes out this peak, which is 480-ish, I think it could make an all-time high again. It would be wrong. It's better for it to come down and fill this gap just to get a better base. It will report earnings in 2 weeks. So we'll see. The last two forecasts, not the actual reports, the two forecasts were fantastic. So it's hard to short that confidence. Okay? Trading wise, better at a lower base. NVO. Hard seller at 102. Hard buyer at 91.50. So you're stuck in the middle. Maybe you have an edge from a volume profile perspective. You have support at 96.50 as well. So ping pong between those three values I just gave you. If you take this out, maybe you have enough to take that out. Buy the dip with confidence against this one, more confidence that one. So it's kind of an interesting statement, interesting ticker to trade. NYT, New York Times. A newscast, short, sell. Whoops. So it's got a rhythm to it. You have support into 39 and hard sellers into 44, and you're right in the middle. So do what you want with that. As an investment, I'm surprised that their income keeps going up. Kudos to the management, whatever they're doing. I would never give them a nickel. There's nothing from a newscast that could tell me to trade better. So trading is what you can do with it, and you have a range. Are you investing for a long time? If they pay a dividend, I guess that would be a good thing to have. Oh, wait, earnings in 3 days. So whatever I told you. Here's another statement. If they lose 39.70, you can pick it up at 36. Realty income. See how they recovered? Because I'm assuming it pays a dividend. And the TLT spiked, which means these guys can spike. If the TLT is spiking, that means rates are falling. That means the alternative to owning stocks that pay dividend is becoming less attractive. I'm going to tell you one thing. If they go above 51.50, it might be a short trip, $2 to $3 up, because there hasn't been, on the way down, they fell too fast. So that's a statement, though. There's an earnings tomorrow. Okay, so that makes it a crapshoot. Buy the dip with confidence into this. Owl, Blue Owl Capital. Going into a prior fail, technically speaking, it's not for me up here. It would have been much better to start at 1250, but it's not that far from it. So if your intentions are longer term, you might have more upside. Decent P&L, at least on paper. I don't know the company. So I see it. Higher lows, higher highs in the last few months. Longer than that, consolidating, and it's above halfway to consolidation. So the bulls are in charge. If you're a slowpoke like me, and you're long because you want to break out of 14, kudos, that's a good long. You break out of 14, you might get $2 out of it. Palo Alto Networks, stuck in a very wild range. Let's put the boxes. No boxes? Okay, I'll give you one box. It's going to take a lot to break out of these edges. I would get long into this lower third. Anything below 238 is a strong buy. Don't take my word for it. Look at that candle. And anything up into 252, 253 is going to be met with hard sellers, 254. But if you take that out, you go to 265. Wait, when does it report? 10 days. Wow. So who did it move with? Somebody else, Palo Alto Network. Fortinet, maybe? Okay. So this one above 1760 could get to 1840, almost 19. Who is this? Path. Okay. I believe I went long somewhere. So I got to go back to my trades and see where I went. I'm going to make a note right now. Okay. It takes a lot of courage to get long a stock into this, but it's going to take a lot from the bears to be able to stop this. So if I wanted to get long, I would wait for the next dip into 1840, and it has earnings in 26 days. So it bounced hard. I would add second batch here. Okay, I remember now. I said I would get long, and then I would add second batch. So if somebody did that, they have a lot of greens on their hands. My first entry may have been at these levels, 16-ish, 16.2. I don't remember. I have to go look at my notes. And if I added here, that means I went long somewhere in the middle, let's say 15.9, somewhere around here. And it's at 17 now. It would have been a good trade. That's why you don't go all in. Palantir. Everything. So I'm all in. No, I'm not. I went long Palantir on the dip, and I made my money by selling puts. And I will do it again. I'm not chasing it up here. This was a target zone. Now, if you're investing in Palantir for the super long term, there's no need to exit because it has higher highs. The highest I've gotten out of the stock is in the 30s. So it is a meme stock. When it came out of the box, it went to the moon. This is not a new company. This is not a pandemic company. This company has been in business for like 11 years, maybe more. Has great pedigree from Wall Street, not from Wall Street, from Silicon Valley. So they know what they're doing. They have connections, and the company has a decent P&L. If you take out 20, you will end up in the 30s. So if you're an investor in Palantir, it's a legit investment. So next time it dips, nibble. I didn't buy calls this time, but I sold puts. PSX, Phillips, yeah. So don't really know what they do anymore. Is it straight up refiner or what is this? Higher lows, higher highs. The bulls are in charge, which is pretty impressive. Now you're going up against a seller at 125-ish. That is hard sell. Last time, 1, 2, 3, 4, 5 times, 6 times it was here. It was sold hard to a big disaster. I would rather get long below 108, to be honest. At least 110. Just in case that this is going to happen again right there. It looks like we could be here. This point in time right there. You had a couple of peaks and they're testing a footing that looks like a head and shoulders. They had a couple of peaks and they're testing a footing that looks like a head and shoulder, because if you lose 110, 108, you're going to end up at 98. It's not a forecast. It's just what if, right? So if you're investing and again, you're rushing into it all in, why? See what they're going to do around 122 and see if they're going to give you an opportunity to get long under 108. Who is this? PayPal. I've stopped trading PayPal. I made money with it. This spike is insane. Same as the drops. First of all, worst website on the planet. I don't know who's running their business. I do business with them on a daily basis and I hate it. The sellers, I don't know what they were selling, but I don't want to find out anymore. I'm done with the stock. Technically speaking, going into 58 should be a difficult area, give or take $1. Coming out of 61 should be even more difficult. If it ever gets back to 65, it should be a hard sell. So if you're long off the bottom and you're not willing to book profits, you and I are not friends. I think I would book profits and turn my attention to something a little bit more obvious. I mean, on the P&L, this thing is obvious as day that it was a buy to dip, yet it wouldn't stop falling. Just wouldn't stop falling. People would say margins, and you look at the P&L, nothing is visible. It's just words, and it wouldn't stop falling. Same with Square. So I'm ditching both, getting out with profits and not looking back. I would rather trade something more transparent, like Visa, MasterCard, more boring, even American Express. I'm done with these guys until they show me stabilization. Until then, this is not an entry point. This yellow box is resistance and it's pretty wide. I wouldn't short it because it could get to 65. Rum. Yeah, I don't like a company whose P&L net losses are growing faster than the net sales. So study the company. What does it do? Online neutral video platform. Oh, I know what that is. Yeah. I don't know. There's only one Twitter, folks. That's all I can say about it. First mover advantage. Above 5.6, you could get 6.4. How about that? Above 5.6, you can get 6.4. So use that to trade it however you want. If you're an investor, just look at the investment side. Earnings are in 8 days, so maybe the company will give you a reason to love it. To me, the P&L is not an investment for me, but it doesn't mean it's not a good investment. Just know what you're doing. Are you investing or trading? If you're trading, you want it about 5.56, whatever that area. The recent failures, let's see. 5.45, so 5.5. That's the most recent biggest seller. SEZL? What is this stuff, folks? Yeah, okay. No P&L. I don't have nothing to say. Operation of a payment platform. Yeah, if I'm not doing PayPal and Square, I'm definitely not doing SEZL. Manizzle. Shopify. Whoa. Okay, so Shopify's reaction was, I missed it, but the reaction is target 1 and 2 are met. Target 3 is up at 69, but I would never hold out to target 3. This is an exit point for me. I don't care, investor or not investor. If I got a 30% rally in a stock and I still can't pull the trigger to book profits. What? I've met maybe 2 or 3 people in my lifetime that would do that. That's not for me. How about this? This is most definitely not a starting point that's obvious to me. Doesn't mean you can't make money with it. It's just not for me. Shopify is doing okay, but that too wouldn't stop falling. So who is this? SMCI. So it hit targets. These are still in play. If they can't get to 280, they will probably retest 240, 230 area. And I think it will hold, but if it doesn't, I think they finish the job at 200. But they're going to follow the markets. So I don't think they get to 200 all by themselves. I don't think they test 230 all by themselves. If we have a positive week, I think it holds up. But that's not reason for me to buy calls here. So hard seller above 272. Use that information. And hard buyer at 228. If you lose these 2 candles, you're going to finish my arrows, and it's going to take a lot to take this out. An endpoint would be 291 for me. I would exit. See that comment? It's still good. SMR, New Scale Power Corporation. My God. We're not done with this power stuff and alternative. Technically speaking, it's not for me up here. If you take out 270, maybe you get the 4. But you have sellers here and above. So now we have higher lows trying to break out of 370. It's 370. I may have said 270. I think there's a seller at 370 to 375. You could have 50 to 70 cents off of it if we have a higher low week. Oh, earnings in 3 days. Never mind. Whatever I say doesn't matter. It's going to move on earnings, and I couldn't tell you which way. Nobody can. If you think you can, you're wrong. Snowflake. Okay, so snow is one of those tickers that gave us a scare. And if you rolled it, you have profits. If you didn't roll it, the trade worked out. It was scary for a moment, but this is where you manage your risk and don't panic, and you come out fine. So Snowflake was not a loss. Sold the put spread at 140, and sold the put spread at 140. So the put spread was 140, 135. It expired out of the money for maximum gains the day of, but I sent out a note saying you can roll it now to avoid the maximum loss that day. And if you did, I gave you 2 alternatives. Either of those alternatives would have brought you money. One would have brought you more money, and the other one would have brought you overall money. So it's green any which way you slice it. The only way the trade was not green is if you did something I didn't post. Then you may have gotten some losses, but I don't know what. So this is not an obvious entry point for Snowflake. It's going into a huge selling candle. It's a 4-hour candle. This one and that one. If I change this to 4 hours, you'll see it right there. See that long tail? That one right there? That's a 4-hour candle. In the span of 4 hours, they opened here at 151. They loved it to 157. They hated it, and then they closed towards the low. And now they're going back into it. Not an obvious entry point, okay? I hope this makes sense. Because we're showing it on a 2-hour candle, it doesn't look the same, but that's what that means. Huge seller area, that's where they're going into. Not an obvious point of entry. Buy the dip into strong support below 145, that would be good. To buy calls into that candle is hoping a lot. But if you own calls and you want to see what they do inside that candle, that's fine. I just want you to know that you're going into sellers. Investor-wise, yeah, I get it. If you bought the dip as an investment, solid. Let's see what they do with it. I think you have about 30 days before the next earnings report, uninterrupted by headlines. Unless somebody else in its industry is reporting, that's always a blind side. Like I'm sure Fortinet influenced a bunch of stocks in its industry. Okay, so who is this? SOFI. Whatever I said about Square and PayPal applies to SOFI to a degree in a firm. I buy dips in SOFI. I don't chase rips. 8.6, let's call it 8.8 fail. Anything at 9 is fail. Anything inside the circle is not an obvious entry point. That is an exit point. Look at it. Look at it. And we're going into it. So shorter term, the day report, yes. Anything, going into 850 is a sold zone. Let me show you that. Again, 4-hour candle, you can see it. In the span of half a day, they opened at 8.2. They loved it to 8.5 and then closed red and then made lower lows since then. So there's a seller hiding inside that big wick into 8.5. It's a fact. It's not an opinion. It's a fact off the chart. There are buyers below. So I would be buying dips into this candle rather than chasing it up. If they take this out, I think they can take that out. I think they can get to 9.4. So buying dips is the right thing to do. Ideally, you want to capture this stuff. Hold here. And then what? Okay. There's an opportunity there. I would hate to put it right here because it's not right there. It's more like right here. Breakout. Eventual trigger for a breakout. And the upside could be pretty nice. Let's see if we can quantify it. See how far out I put it? I don't think it happens next couple of days. What is that? I don't know what that is. Wow, you guys keep stumping me. This is a target here and $2. I don't go long into this zone. Buy the dip into 1.7. SYM, Symbiotic. I feel like the pandemic again. Tickers, I don't know. Automation Technology Company. Okay, sounds like self-driving technology. Buyers, support into 34 or lower. Actually 35 or lower support. And you just ran into resistance from here to 42. Sellers. If you want one candle that matters, is probably this one. Resistance. So you treat it however you want. And you do have support. AT&T, again, companies that pay a dividend got some relief this week because of the collapse in the bond yields. Okay. It's one thing going to 16.2. It's another thing breaking out of 16.2. Look left, big sellers. It is good that they're trying to tackle this candle out. So I think this candle means something. I would get long in the lower third of this candle. And up here it's pushing up against resistance. Okay, so good job bouncing. If you bought the dip, good job. If you bought it for an investment because you want to collect a dividend that pays a lot of dividend, then that's fine. You don't need to trade it. If you bought it as a trade, consider booking. Team. Sellers into 184, but if you take that out, you can probably get to 192, where a hard line in the sand has existed for a while. So you could get to 190, but it's an exit point because they're selling rallies. Hard bounce. So note to yourself that there's a big buyer here. This was my target. They exceeded it by a little bit. I don't count this. You can count it as a hard, definitely sell your puts area. Decent business. So at some point it finds support, and it did find support inside this box. So there's nothing weird about this chart. It's a good investment. If you bought the dip, good job, high five yourself. If you traded the dip, you should be exiting here or above. Toyota, definitely not for me. Great chart price action. It's not for me. I think Toyota goes to 180 before it goes to 200. Tesla, let's take out. I did a video on Tesla. There was some manipulation 2 days ago, Thursday maybe, this spike out of the blue in the morning. They spent all day chasing it, boink, to the penny, and then they dropped down to here. They chased it. They broke out from it. So stock is manipulated. So Tesla is still in the hands of the bears. If Tesla doesn't get back to 237, 237, that area, I think there's a chance of it coming back to retesting this stuff. So this was my target. It doesn't have to go there, but I know that it has necklines it needs to tackle. If it doesn't recover those necklines, it is in a descending channel on a higher time frame. So let me talk to you about it here. 220 was a huge resistance, big fight back in 22 October, huge fight in February 23, big breakout in May or June or May, huge bounce in August, lost it, and now they're trying to recover it. Not a good opportunity to get long without acknowledging the fact that they could curl back down, lose this, and come back to here. That's not my forecast, but it is one of two scenarios. So we either fill the gap to 245 or we retest the floor that we just bounced off of. Texas Instruments, again, this one I had a trade. They overdid it in the selling. And I think now they can drift up to 158. But if I bought the dip, I'd be out. If I had a credit put spread or a sold put that was in trouble, I would be out. I don't want to mess around with these things anymore. Beautiful P&L, and the price action was not respecting that one bit. So it tells me it's manipulated above my abilities, so I will walk away from it. So here is a line that you can imagine. Hard sellers, right? I'm not a trend line guy, but I have to show it. There's a habit. The sellers are in charge. That's what that line says. Sellers in charge. I'm not saying it's a trend line, you can't touch it. Sellers in charge, which equals selling rips, not sips. That would be a bar. Selling rips. So how far they were going to sell it? 146, 145, 141? Question mark, question mark, question mark. It's going into a lot of sellers around 155. So you should know that and decide on your own what you want to do. Unity, some people wanted to buy the dip. I agreed. I didn't do it. I wouldn't chase it up here. This worked out several times. The behavior is choppy. They're chopping up into sellers at 28.50. I don't love it up here. If you're an investor for the long term, you bought the dip, you got yourself a good entry point, don't look at it. You're an investor. If you're a trader, you should know that better entry, this box, I would keep it, but I would use it because this is the spot they couldn't hold. Trust me, there's resistance zone, and it's pretty wide. That's why I can't give you any instructions. I know there are sellers somewhere inside this box, so if you're starting longs here, you're starting right into sellers. It's better to start on a dip or wait. Let them chop inside this box for a little bit. If you're buying calls, that equals you losing money if it just chops around. UPS, freaking UPS. Definitely lost money on UPS. One of two stocks that absolutely lost me money this year. JP Morgan, UPS, those are two I remember. Anyway, I wouldn't touch it. I'm done with UPS for my entire life because I realized that they have labor issues that I wasn't aware of, and that's just an extra variable I don't need. If I go along the SPY or SPX, or Apple, I'm going long companies or the ETF that has problems from the market, and that's it. They don't have problems from the market, problems from gas prices, problems from laborers, problems from this and from that, throughput issues. It's like, I'm done with UPS. Out the window. Sellers into 148. Definitely harder sellers into 154. If I was assigned shares and accepted the shares, I would be selling covered calls hard against them at the risk of getting called away from my shares at a loss. I don't want to risk any more downsides. The problem with UPS is I think that technically, if you look back, it had a rally that doesn't make sense. This created a huge pocket of weakness that they wanted to fill. And this is a huge head and shoulders that targets the full fill of that and then some. So I don't want to be involved in UPS. For me, it was a credit put spread, and I took maximum loss on it. And that's all there is to it. Walk away from it. It is a weak chart. Upstart did some amazing things in the olden days. This will never come back. If it does, short the hell out of it, because this is not the same company. Okay, so we're going on the income is falling off a cliff. It was growing like gangbusters, and now it's shrinking. So until they can prove that they can come back to the old ways of making money, this one I think will get back to 28, easier than getting to 33. I definitely would not short it, most definitely not into its earnings. So come to me during the earnings, on the day it will report earnings, and we'll look into the options. Maybe there are clues. Technically speaking, you're going into a pivot zone, so it's a buy to dip opportunity at 26. Oh yeah? Yeah, I know a couple people that have loans from them. Verizon, if they're quoting absurd quotes on Upstart, that means they don't have a lot of money to give, and they want to give it to people, and they want to charge them. That's what it tells me. Yeah. Okay. So check this out. Look at this. Look at this candle. I mean, this arrow and this candle and this, what the F? I don't know what that was for, but let's pay attention to it. I'll put an arrow to it. Was there a spike one day or something? So what am I saying? It took a very wild detour, and this here is not a starting point, is what I'm saying. So if you took longs in Verizon because you wanted the income, then keep them. If you took longs because you wanted to buy a company that is defended by its dividend, then book it. You got the mother of all rallies. This doesn't happen in stocks like Verizon. Okay? So it was a huge rally. But now the opportunity is that if they dip into 34.5 and they hold it, the bulls are out of this descending channel. I'm losing money on this one. And I bought shares, I don't know where, and I may have sold a $15 put. Either way, it's an investment for the long term, and I can still double my position. So I'm not adding right here. I bought shares, and then I sold one batch of puts at 15. So we'll see if that's going to cost me money or not. The fundamentals have not changed. They reported and spiked and dropped. I'm not sure what the disconnect was. The P&L is still okay. So it's a small position still, but I'm monitoring it. All right. So if you need specifics on how to handle your position, let me know. It was unfortunate how it fell apart below 15. So now coming back into 15 is going to be laborious. Look at this drop right here, and it didn't come back. So not every drop comes back. So I will decide on it in the next couple of days, couple of weeks maybe. All right, so that's it for the tickers. Don't forget that there is a very important strategy video later tonight. Don't miss it.